Looking at the S&P 500 here, my narrative hasn't changed much. We are inside of, we are pretty much having a retracement back up. We had the Japanese market crash that began from 532 all the way down to 510, and so far we have been recovering back up, currently sitting at 532. And the gap down here, the gap up here is the Amazon gap at 543. And what I think is going on over the next 2 weeks is that we will be making our way up inside of the zone. And looking at the intraday time frame, the way that you can trade Monday session is you can trade it this way. You can draw these levels, and I assure you, if you follow these levels and you see that the market is reactive to it, you can get some amazing trades in, or at least one amazing trade in, one high probability trade in within the intraday time frame. This chart that we are looking at is on the 5-minute time frame, and we can see that we have a firm resistance level, which is great. I love having these resistance levels on the intraday because this is where the liquidity comes from. So we had the origin here. This is where we created that resistance level. We established the resistance level there, and so far this is where we confirmed the resistance level on Friday's session, having a mini fake out. And I always tell traders, don't expect much from Fridays. So I did not trade that. I ended up skewering my profits ahead of time, closed the day $922 in profit. And this is how I will be trading the S&P 500, the SPY ticker, on Monday session. If I see that bulls come back down to, let's say, 531 area, and they hold 531, even if they go down to, let's say, the intraday time frame, right, on the 5-minute time frame, even if they come down to 528, as long as they come back up inside of the 531.12, that tells me, hey, prepare for a potential trade opportunity above 533.14 breakout. So this resistance level, once we break out above it, this can give us a good liquidity to the upside, and that's a level that I would like to trade. So again, it will really depend on how strong of the reaction will be on the 5-minute time frame when we come back up above 531.12. That's if we go down. And if we don't go down, let's say we continue to trade at 532.90, which is Friday's closing session, just around here, especially with the volatility dying down. I'm really liking the fact that volatility is dying down, especially coming into Sunday session. This means that premiums are going to come back to normal, and that's the best time that the market likes to catch the majority off guard. So we'll take a look at what I mean by that. But for now, team, within the intraday 5-minute level and even the 2-minute level, this is the level of resistance that I'm watching to catch a nice opportunity to the upside. We can almost say this looks like a nice cup and handle too. So we had the handle there, or let's say even if we create the handle on Monday session, this looks like we can get a nice breakout. And once we break above 533, the next target we will look out for on the intraday is 534.50. And depending on how strong momentum is there, we will continue to trade the upside if the momentum is there. But for now, what I would like to show our team is, let's draw these levels. Let's draw this just in case that does turn out to be the case tomorrow, so that we know we will remember it. So I don't want to predict the levels ahead of time. Matter of fact, I'm really open to seeing pullbacks as well, so I'm just going to remove it. But just know, if we get above 533, I'm going to take a trade off of that towards 534.59 next, and then 536.97. My main target heading into this week is going to be this gap fill here at 543. Many people thought the 532 gap will not be filled, and I kept saying we're going to fill that gap. We're going to fill that gap. We got very close here, but sold off, and that sell-off came to a halt exactly where this level of support was. So on the daily chart, this is where bulls, this is where we saw a big demand reaction back in May 31st. And that's where we had that rebound off. And we came down here, and I said, team, despite us having this major sell-off, we are going to have a big gap up. And not a big gap up. I said we would have a big gap up. And that's what happened. We had a big gap up that continued the uptrend, or that continued the retracement back up. And then we had a follow-through on Friday's session. So so far, the 532 gap from the Japanese market crash has been filled. Now, the question is, are we going to fill the gap from the Amazon earnings crash at 543? This is going to be very key for me. And looking at the daily time frame here on the S&P 500, we have this supply zone that I'm looking very forward to heading into this week. So the reason why I say that is because the way that the market works is on the retracement, I saw a lot of bears trying to short the market on this, on this retracement back up. And I was just scratching my head like, are these guys serious? Are they seriously shorting the market here. Obviously, I can't say, hey, don't short the market because, this is a bad level to short, because then if it goes bad, I'm going to be the one to be blamed. So, that's how the trader mentality works. So I kept my mouth shut, and I just watched a lot of our traders just scratching their heads, being like, "Why is the market going up?" And unfortunately, we were going for a retracement. When you see a huge market crash like that, you're going to see premiums coming back to normalcy before further downside. So now that we have erased the Japanese market crash, are we going to retest the 20 EMA line here? This is where the bull strength is going to be tested. Heading into this week, this is where the bull strength will be tested. And I kept telling the traders, after a big lower low like that, you need the market to come back up, retest this level of resistance on this downtrend inside of this supply zone before we start to, if we do, which I do strongly believe that the market will see a lot of headwinds there, but unless right now I'm neutral. Okay, I'm neutral, and heading into Monday session, if I see that bulls are going to break above this level of resistance, which I showed on the 5-minute intraday level, and we'll take a look at it again so you guys can write it down, or jot on your chart. If that turns out to be the case, then my target is going to be 538, retesting the level of resistance there on the 20 EMA line, behaving as resistance now, as well as maybe even moving back inside of this supply zone. So what can we expect from the market once we come inside of the supply zone, where, well, there are a lot of resistance levels. We have this downtrend, and this right here, this was the origin of the downtrend. This is the establishment of the downtrend, and this right here is going to be the confirmation if the market shows weakness. I would like to show you two charts, two illustrations from my mentorship. So this right here this is known as a smart money concept backtest. It's a short signal strategy, meaning a bearish signal strategy at the supply zone. And the way that it works is we have a drop-based drop. This is a consolidation. This is where there was overwhelming supply, which broke down. And this right here is very similar to what we are what we are seeing there on SPY. So what we are expecting on the S&P 500 and what we have been expecting is SPY moving back inside of that supply zone so that we can look for a supply candle reversal at the retest of the zone to take a short trade, to take a bearish trade inside of that zone. And this zone is right here. So this is the zone. You can see this was the drop. And the way that you can measure a drop-based drop, or you can measure a breakout, is usually what you can do is you can duplicate where the movement takes place, and you can see this came to halt exactly around 510, which is just about the measurement of the breakdown there. So now that we are coming back inside of the zone, I would like to see how we are going to react inside of the zone at the 538 to the 542 level. I would like to close out. I would like our team to close out a lot of their positions as soon as we come back inside of this level, especially if you have any short-term expirations and whatnot. You don't want to be in it at a level where the volatility can significantly increase. So I believe that once we come back inside of this zone, this is where bears are going to show strength. And this right here, we can see this is the trend line. And that trend line here, let's take a look at how trend line formations are. So we will be covering this material in the mentorship class heading into, I believe, Thursday, or if not Thursday, the following Tuesday. And this is because we are moving on to market structure. So we'll be moving on to introduction to market structure in price action after covering support and resistance. And I'll be dedicating the next two classes to just simply covering the rest of the support and resistance and answering all questions from our team to make sure that everybody understands support and resistance and supply and demand dynamics before we move on. But looking at this chart here, the best time frame to trade falling resistance trend lines. This is referring to this big resistance trend line there. So far, we have the origin here, which was the all-time highs, historic all-time highs at 565. This is where resistance level was formed, created. So the first stage is the origin. The second phase, or the second stage, is the second touch, which is where we start to track the trend line. So what we do is we draw a line from there to there, and then we extend it all the way down so that we can test the third retest and the fourth retest. The reason why is because the third retest is where we trade off of the trend line. So the second test is where we start to track the trend line. Even then, if you miss out on this move, you don't have to worry, because the third touch is where the trade off of the trend line is, and that's what provides the greatest opportunity, along with the fourth touch, which also is a trade off of the trend line. So our focus is going to be this trend line for the next 2 weeks and seeing how bulls are going to react as we get closer and closer. Now, the question for this week is going to be, are we going to fill this gap here, which very well aligns with the 543 area? I'm not going to bet on it. I don't want to be sucked in, but at the same time, I will trade. I will trade the bullishness above 532 here towards the 538. But once we reach around 538, this is where I go on neutral mode and I take it easy. So, taking a look at the 5-minute time frame again to show our team how you can trade the setup on Monday session. If we come up above this resistance level at 533, which we have the origin here, and then the second test, which is where we track the support, and this is the third test where it confirms. Now, we did break out, but that was a fake out. Friday's nonsensical stuff where options expirations expire and you got options rollovers and all kinds of shenanigans. So heading into Monday is where you have new liquidity. This is where new liquidity comes into the market, and that's what we will be trading. So if bulls do break above 533, let's say they come down a little bit to 531 somehow, pre-market we sell off, and what I will be paying attention for is how they are going to regain that level at 533. If we create a big demand candle, a big green candle, let's say a candle like that, I'm going to trade it expecting them to break out. If I see something like this where I'm clearly seeing a digestion taking place within the first 30 minutes above this level of resistance, I'm going to trade that expecting bulls to break out. So yeah, team, if we do break out, then the first line of resistance that I will watch for on the intraday 5-minute and 2-minute time frame is 535.60, and then the second line is going to be the breakdown of the Amazon, which was Amazon earnings, which is 536.92. If we continue to show weakness above those levels, then I'm going to target 538. And yeah, inside of the supply zone, what I have seen through my experience is that sometimes they even push a little bit inside of the supply zone by going up a little bit there. I'm not going to bet on it again, team, but at the same time, I am going to possibly be open to that opportunity there. However, I do want the team to remain cautious, to continue to remain cautious, because this is what I'm watching for on the bigger time frame. We still are not out of the woods yet. This could just be a retracement, as we can see here. And if this head and shoulders does end up dropping back down, then we could come down. Let's say we could spend some time inside of this zone here, basically trying to regain the 20 EMA line, but continue to fail and fail and fail. And as we continue to fail to hold above the 20 EMA line, and eventually we fall back in, the TTM squeeze will have fired green, and the bullish fuel will have been wasted there. So if that happens there, and we start to really see some bearish breakdown candles below this neckline support there, then I will target, my first target is going to be not the 518, so the first target obviously is going to be the 518, which is that support level, and this support level there's a gap there. However, I will not expect the market to really be very strong on the rebound there. I would expect, if there's continued weakness, I would expect them to break that level of support like butter, and we would go down all the way to 549 and fill this gap here that has yet to be filled. I know this candle looks like it filled the gap, but the gap has not really been filled yet. So if we go down there, if we show weakness around here and this head and shoulders starts to really come to life, then we will target 495. And if we lose 495, there's a great chance that all hell will break loose, and that's where the talks for recession and all that will come in, where we could, in a case of a recession, and team, do keep in mind that when a recession does take place, we don't find out that we're in a recession until it has happened, until it has already played out. So if this head and shoulders does end up playing out, we could go all the way down to 409, because yeah, we will, just like how we went back up in this sharp move, we could go down all the way there, and that's where the full-on bottom will be. So let me show you some examples of head and shoulders and what to expect from this pattern. Let's go over the head and shoulders. Let's take a look at some examples. So this is some example. These are some examples. This is the illustration here, and this tells us what the characteristics are. We have an uptrend rally that is too far extended and sees the first small profit-taking pullback. So that is the small. This is the first profit-taking pullback, and then greedy bulls that missed out on the uptrend will enter the trade, and that will create that that small rebound there, and that's where the exhaustive move will come in just inside of that supply zone. Let me draw that supply zone as well, because that is very key that we do have that on all our charts, so that the only way we will be able to tell that bulls are overwhelming bears is if they take out that big supply zone above 550. So yeah, let's take a look at some examples. You can see once the head and shoulders plays out, it takes out it takes out all of the uptrend that pushed the market all the way up. So this is another example here. This is another example here. We can see it always takes out the whole move. You can see this right here, the support did not hold. This right here, the support did not hold. It just, anytime we go back to any of these zones here, let's say this particular zone right here, you would think that, oh, the market's going to bounce. But really what it will do is it'll just create a zone there. It'll create like a supply zone there, just like how that was a demand. And in turn, this will send it down to the next level there. I'm not saying that will turn out to be the case here, but we will be on the lookout for this, okay? Let's take a look at, oh, wow, there's only 3 of them. I expected there to be 5. This is, I'm looking at an old chart. The original version of the PDF. So there should be 5 examples on yours if you go to the notes section and download it. But yeah, team, this is what I'm looking out for. And until this really happens, until this big supply zone is taken out, I'm going to take it easy. All right. So if they, let's say they go all the way up here and then perhaps they come back down to 533 and then turn that level into support and then move back up, I will see that as a positive, as a positive sentiment or a positive thing on the bull side, that what they could do is they could just consolidate a rally. Let's say this will be a rally. This will be a rally, and then they would consolidate a nice zone here and then basically break that level of resistance. Once they break the 550 resistance, that's it. Bulls are going to just rocket up towards 565, and there's going to be a lot of fuel from the bear side who will cover their short positions that will trigger that breakout. So let me remove that excess chart there so that I don't confuse our team. But so far, team, do you have a good idea of what we can expect heading into this, heading into the next couple of weeks? Hopefully you do. Hopefully you do. Awesome. I really hope we see 543 soon. Jorge, it is possible, but don't fully bet on it. Try to always, every time, whenever you have a target ahead of time, you want to secure profits 80% on the way through before you reach the 100% target. So that way you always are selling on the strength. Terry, please let me know if you have any confusions. I would love to cover them. But yeah, so far, team, this is another chart, another perspective here. We could be going up here for that retest, and we don't want to be predicting what's going to happen in the market, but until we get that retest at 543 and then we get a reaction, we cannot say anything until then. We cannot really, we just have to wait, okay? We just have to wait, but once we come back inside of the zone, this is when I will take things easy. So far, I have positioned myself, despite the bearishness, I have positioned myself on the retracement, because again, we never know, and we always want to be planning ahead of time. So I mentioned the regen trade too, which worked out really well, but I ended up deleting that trade for the safety of the team because it costed $4,500. But I will be sending out more of these bigger trades for our bigger accounts, larger accounts. But so far, team, I'm bullish on Meta. You can see the Meta trade is green so far. I called out QCOM. So far, we are somewhat green on QCOM. I called out Amazon, which we are somewhat green on. Rainbond called out MU. So we definitely have some upside exposure. We have picked up some nice opportunities from this pullback, and if we continue to show strength, then I will just continue to hold them. However, as soon as I see that the things that I would expect it to happens, then I will get out of these positions and I'll stay on the sidelines, or I'll try to take advantage of the market downside towards the 495 level, this level right here, the gap there, and we will see from there. We'll see how things go. But so far, team, this is what I'm watching on the bigger picture. I'm watching this pullback, or I'm watching this retracement here to come back inside of that supply zone, the same way that we saw on our mentorship. And I'm also watching this test at this resistance line here. So yeah, I agree, Terry. The market is definitely very confusing right now, and that's why I don't really have any setups to share with the team yet. There are stocks that I'm looking at, but I'm only going to trade them as as the market opens and I see that there's strength. So let's say heading into tomorrow's trading session, I recognize strength in the markets, and I see that there are better developments within the news and within all sorts of sentiment in the market. Then I will basically I will trade those setups that I'm looking at, such as snow and all of those within the intraday time frame. The way that I have been, within the live trading room, alerting it for this for these alerts as well, sending it out in the alerts as well, whether it be a day trade or a swing trade, and we will go from there. But so far, team, I think patience is really key. Being patient here can be very, very crucial. And yeah, so looking at some bullish signals, at least what we can see on the bullish side is that we are very close to the 200 simple moving average, and that's why demand was so strong back up. So we did get the retest at the 30% RSI, which is another good thing about being in an uptrending market. Once we get a 30% at the RSI, this means that the selling has been exhausted, and that bulls can step in again and try to fire a squeeze to the upside the same way that they did. So what are some signals that I'll be looking out for on the bullish case, team? Here's what I'm looking out for. You see this downtrend line here? The same way I'm expecting something like this. So you can see this was let's say the origin. This is where the establishment was. This is the confirmation there. And yes, we did come down, right? Even if we tested, we could come down a little bit. We could come down a little bit, but it has to be under low volatility. It has to really hold on the same way that we held over here, which tells us, hey, bulls are defending and there's nothing we can do. If bulls are stepping in and bulls are showing strength, we can break that downtrend, considering that we are still in an uptrending market on the overall picture. So if they do that and they break that downtrend there by consolidating or doing something around here, then I would expect them to just naturally break out. Another example that I can show you as an illustration for what we can expect is this one right here. So you can see this was a downtrend, and what happened here. So it can be like this too. I can draw it like that, and you can see we retested the 30% RSI, very, very similar to these two. And what ended up happening is once we broke the downtrend there, we just went on and we continued the uptrend higher. We came back to the resistance, broke the resistance, and just continued higher. So if we see these things here, if we see the same here, then why not? I will be bullish. I will take it for what it is, especially heading into low rates economy or falling rates economy, where the market can see some ease. So let's take a look at some other charts that I have here. Let's go to okay, so we did take a look at this one. We talked about the breakdown here. Let's go over what else we have. So this one's the same. And yeah, team, that's about it, actually. That's about it on QQQ. Let's see how we are going to react inside of the zone here. What I will look out for, team, and I just want you to know, okay, the market is amazing. It will always, always give you those signals, okay? So you don't have to force yourself into trades. You don't have to do any of that. You can just remain patient and let the market basically give you those signals. So what do I mean by that? You see this big bearish breakdown. If you go back, matter of fact, if you watch Friday's mentorship class that's in the library, I made it available for everyone because we didn't really talk about much of the class. We didn't talk about materials. We just talked about the market for like 2 hours. But what we were saying there is pretty much if we see a big bearish rejection and you see the same narrative where I'm very, very concerned about the market, and I will always be. If you go back to August 1 or if you go to that class where we looked at those concerns back in August, what I was saying about the trend and everything, which ended up playing out, I will say the same thing if I sense those weakness signals. So what I'm trying to say here, team, is that the market is always going to be crispy clear and tell us, hey, I'm very weak here. That's why I'm printing these big supply bars, these big red candles, these hollow candles, and I'm preparing for a massive breakdown. So or the market will tell us as soon as we're up here, the market will just consolidate really well, digest really well, continue to wick, and it'll say, hey, I'm preparing to go up higher after pretty much digesting this big this rally back up from 510 to, let's say, 540. If that turns out to be the case and we form a bear flag, then I would we form a bull flag or a consolidation here, I will take that consolidation as a signal that they are basically they are invalidating that head and shoulders. So how can a head and shoulders be invalidated? I'll show you how. The way that a chart pattern can be invalidated is, let's say they will come up here and they will do something like that. They will basically spend a lot of time here. They will spend a lot of time here, not going down. And if they spend a lot of time here, not going down, what's basically happening is you got the short positions here that we're shorting on the head and shoulders there. Cut their positions as soon as we break a certain resistance level, and that squeeze is what's going to propel the markets higher towards this level of resistance. And then God knows from there, maybe we pull back from there, but then we rock it up and we make new all-time highs. That's what I'm looking out for on the S&P 500. If we see this digestion here, this will tell us that they are basically digesting this. They are trying to invalidate this potential head and shoulders by creating a digestion and not going down and having that lower high structure being formed. So let's take a look at QQQ. QQQ on the other hand, this is the daily chart. We had the origin here. We had the establishment phase. We had the origin around here. This was around the establishment phase, and this was the third test. So the third test really had a bearish reaction, and we sold off big. And now we are coming back. We have filled the gap here from the Japanese market crash. We have filled that gap, erased that market crash, and we are very close to the Amazon gap fill at 459.20. So once we fill this gap there and we break this downtrend, that means that QQQ will no longer be in a downtrend. And this is because we're back to the 200 simple moving average line. And if this is a good opportunity, if investors see this as a good opportunity, they are going to load up because, like I said, whenever, let's take a look at the bigger picture. We have not tested the 200 simple moving average line, which QQQ tested, ever since 2023, ever since very early 2023, just as the market went from a bear market to a bull market, as we can see here from the falling 200 simple moving average line to then the rising slope of the 200 simple moving average line, putting us in an uptrend where we went for expansion, contraction, expansion, contraction, and now another big expansion. And we are back down. We have contracted back to the 200 simple moving average line. And this could be seen as an opportunity for long-term investors for that rate cut sell-off. You know how they say the market usually sees a big, or market anticipates a big sell-off just heading into the rate cut? What if that was indeed the sell-off? What if the market used that opportunity to get that sell-off, and then we basically break the downtrends? QQQ will lead the downtrend breakout the same way that it led the downtrend, and basically put an end to the current downtrend that we have on the daily chart as shown on QQQ, as well as SPY here. So as we can see, so if this downtrend ends, I don't see why we couldn't go higher. But if we come back inside of the zone and we sense weakness and we get the candles that we are looking out for, which are big supply bars, the same way that we saw that candle, then I'm going to be taking advantage of that momentum regardless of whether it's a fake out or not. Okay, what I have learned is that if you see a bearish big supply bar, take it for what it is. Okay, if you're in an uptrending market, obviously you have to be careful. You don't want to be especially like this bearish breakdown, you don't want to say, oh, you know what, this is going to break down, I'm going to buy puts ahead of time, and then you wake up the next day trapped, and you basically are the reason why this market is getting fueled. So my point is, this is different. This is different because we have a downtrend on the daily time frame, the 4-hour time frame, the 1-hour time frame, the 30-minute time frame, the 5-minute, the 2-minute. Now let's go to the bigger picture. Now this is where things get very interesting, team. If we go to the bigger picture time frame, we can see that the S&P 500 SPY printed a big Marabuzzo candle. So a big demand candle, closing the week very strong. They closed the first week of August very strong, and heading into next week, if we somehow, some way break above 550, that will be greatly bullish for the bulls. That will put the bulls back in motion, and that's going to be very interesting for what's about to come. And we will also regain the 20 EMA line. Another thing to point out is the recent big correction in the market actually ended as soon as we had 3 big bearish weeks. So we had 1, 2, 3 big bearish weeks. 1, 2, 3, 3 big bearish weeks, followed by a reversal, and that was basically the move back up. So is that something that we can expect in the market this time? We will find out. The volume was definitely there. This volume here, these 4 weeks of the last 4 weeks here, the last month shows us that there was major shakeout. A lot of weak hands sold that made the market very volatile. And heading forward, the market could possibly become less volatile now that we have exchanged the old buyers with new buyers that are that are more confident that this can go higher. So let's take a look at the monthly time frame here. The monthly so far looks very interesting. We have already, it is August 11th, and we have already come back up far more than the 50% retracement. So imagine these guys, these bulls come all the way back up to the 545 area. How mind-blowing will that be if we come back up to the 550 area? Now let's take a look at why this is important. So I'm going to go ahead and remove all this information here, all of these charts, and let's take a look at the daily, the monthly candles here. Each candle here represents 1 month. So the fact that we got this big wick here and then we got this big wick down here tells us we collected a lot of liquidity, which is what the market needs in order to basically continue to function and propel higher in this case. So seeing this monthly candle and seeing this big regain on the monthly candle, perhaps the momentum will be very strong for the rest of this month to get us to regain the 550. If we regain the 550, this will mean that nothing happened in that entire sell-off. And that will be very interesting, because if you see a big wick sell-off like that, the next candle is likely going to be something like that. The next candle is just going to be a big green, and that green is going to be propelled by this wick down here. So imagine they do something like that. You see what I mean, team? It'll just put the market back in an uptrend like nothing happened. I'm not saying this will be the case. I'm just trying to show the possibilities here for what we can potentially expect. Now the fact that we have regained this much on this month here, this means that we will have to wait until the month of September. So this is the candle of August. We will have to wait until the month of September to basically this candle to fully close, to whether we will do this, whether we will just absorb, if this happens where we just absorb that candle sell off again. If we just absorb that candle sell off, that wick right there, this is the most perfect scenario, or the most perfect confirmation that the market will literally break down very heavy, and the breakdown will push us again, like I said, all the way to 495. So if we see any sort of weakness where we come down below, I would say we can use the confirmation, this month's confirmation here at 521. If we go below 521, that is it. You must either hedge or you must take advantage of the market downside, because the sentiment and the momentum is going to be very strong, where we will not hold, like I said earlier, we will not hold the 510, which is the daily support right here. Where was it? Right around here. Right here, we will not hold that, and instead what will happen is we will basically tear right through that. We will tear right through that and create a massive bearish supply candle like that. And I assure you, if that candle does happen, believe it or not, the next month after that is going to be even more deadly, more brutal, where we will go to 479, and who knows what will happen there. But things will get very interesting. Considering that this is a big supply zone, this is a big demand zone. If the market sentiment is so insanely strong, then I would say that the S&P 500 will go all the way down inside of this zone, and that's where the buyers are going to show up, and show up with a lot of strength, because this is the smart money zone, where we will have a rally, base, and then another rally. So let me duplicate that. You see rally, base, rally. And yeah, so this will basically lead to another rally after that, with the smart money zone. That's what I am expecting from the market. This is these are some things that I'm looking out for. Now, if I see them again, if they regain 550, that's going to be very interesting for me. If they absorb this big supply bar, that's going to be very interesting to me, and that will tell me that bulls are going to step in. And even if it's a small rebound, they can they can get more upside from it. So even if we come up to around 550 and we close the month at even 545, then what will happen is, because we had this big wick down there, that's going to be the fuel where the shorts will cover their positions and get a green candle like that on the monthly. And I assure you, if we get a green candle like that on the monthly, oh my God, bulls are going to be just barking, just very wild and just grinding the market higher. So Yeah, that's my analysis for the S&P 500. So far, I see SPY broke that downtrend, the 533 downtrend. Team, I actually want to show you how the futures market is looking. So this is how the futures market is looking on the S&P 500. And take a look. Doesn't look too bad, right? Really doesn't look too bad. We had a big demand candle there on August 8th, and so far it could be doing some mini digestion, but yeah, once it's ready, it can basically move up, maybe even get above the 20 EMA line and move towards this level around here, retest the big supply zone inside of that, and then sell off from there. Let's go to QQQ. Let's go to NASDAQ futures as well. This is NASDAQ futures, and look at NASDAQ futures, team. Tell me that doesn't look, and that was, this right here was basically the Amazon market crash. You can see like the Nasdaq does not look too bad at all. We got a retest at the daily time frame, which tells us that the technology sector had an amazing correction. So the technology sector here, this is the XLK, the technology sector, which houses Microsoft, NVIDIA, Apple, AVGO, CRM, ADB, AMD, Oracle, ACN, Cisco, Qualcomm, IBM holdings. This can get more buyers and really push the market up, considering the RSI is at 30%. This is a buy signal the same way that it was a buy signal down there. So let's take a look at some other sectors really fast. XLF is the financial sector, and XLF does not look too bad at all. Yes, we had this double top, but the double top already fired down in just 3 candles. And so far, if bulls do maintain above 42 and really hold well above 42, consolidating above the 20 EMA as well as this bullish ascending breakout, then this can head back up to 444, breaking that level of resistance and seeing more upside, especially with the rate cut heading into September 19th. There's going to be a very likely, very highly probability rate cut on September 19th to September 21st. That's when the FOMC meeting is, the rate cut decision, and the rate decision. And if they do cut rates, the banks are going to greatly benefit from it. Small caps are going to greatly benefit from it. And I'm really loving what I see from small cap. The Russell 2000 represents the small caps. And bear with me here for a second, team. You can see a lot of these stocks are beating earnings. This one, you can see it beat earnings, and it looks like, I don't even know what this stock is, PRA, but it looks like they're about to rocket. And the point that I'm trying to show you here is that a lot of stocks are beating earnings. This one also beat earnings right here. Crystal Biotech. Let's go to this one here. This one also had positive earnings reaction. A lot of these stocks are beating earnings, and they don't look too bad. So it's going to be interesting, okay? It's really going to be interesting, and I'm very excited for what the future holds for us here. I'm liking this big market drop, but JP Morgan came out and said that this sell-off is not fully out of the way. What they said was, they said that the market sell-off, the market sell-off is basically 50 to 60% in, and that we could get another big market sell-off. And the reason why they said that is because they said something regarding the carryover from the short positions and whatnot. And this is where I think those carry-offs will come in, because this is a level of supply, so it makes perfect sense for us to see that. However, I will be open to other possibilities where the market can really shake that off. And if they shake it off, there's nothing we could do, but to go long in the markets. I'm not going to tell you to be bullish or bearish. I showed the possibilities here for what we can expect from the markets, and let's take it for what it is until we see further data. So far, any questions, team? That's about it for me. That concludes my analysis for today.